I purchased a building, or let's say maybe I've already had a building, maybe for, 3 to 4 years or 5 years. Um, or yeah, maybe 5 years, right? I'm listening to our podcast. How does it work? And is it too late? Or can anyone sort of join in? And what's that time limit? Because then we have some people thinking to themselves, guys, I've owned this building for 5 years. I can't do that. But so what are those time periods? How does this work?
Yeah. So if you look at a cost seg study, you kind of look at it, and if you really break it down, it's really six steps. You got to identify the property and the depreciable basis. So you're like, okay, I got this medical building, it's 3.5 million. Then you got to collect all the information uh, and the property data associated with that. Then you have to perform more of an engineer-based analysis. It can't be based on estimates. You have to classify the components into modified cost accelerated recovery system, its makers. Then you reconcile the totals to the actual documentation to say, okay, I got 3.5 million, all these invoices add up. And then finally you implement it on the tax return. So you kind of have to walk through those detailed steps before to do an actual cost seg study, and implementing on the return is key. Now, your question was, hey, if a few years pass, am I kind of blocked out? Well, the beauty of this is the IRS allows you to go back in time and say you built, purchased that building or constructed that building 5 years ago. You haven't lost on the deductions. You have depreciated on what was traditionally given to you. Say it was commercial real estate, 39 years. So you've been claiming the depreciation. But let's just say that $3.5 million of basis, if you had done a cost seg 5 years ago, it should have been like 1.5 million of accumulated depreciation, but you only have 500. Well, you can go back and recapture that $1 million of missed deductions in those prior years. And what the government does here is you don't have to file amended returns, which is fantastic news to a lot of small business owners.
That's
And the reason
great.
I
Yeah.
say that,
Yeah. Yeah.
you've got a lot of entities which are S corporations or partnerships, LLCs, and they're flow through entities. So their business owners are getting a Schedule K1. So anytime you take a benefit or you record income on the entity level, that passes through on a K1 and you put it on your individual return. So say you go back 5 years and you've done this, but you didn't do a cost seg study. To take advantage of this without what I'm going to talk about, you would have to file amended returns for the entity as well as the individual owners. So say you have a physician's practice and you have 15 doctors, are all partners. That means traditionally to get this deduction, you'd have to amend that tax return from 5 years ago and get amended Schedule K1s for all the partners, and they
Oh,
would
it's a
have to,
mess.
yeah,
It's a mess.
exactly. So the beauty here is you can file what's called a Form 3115, an application for change in accounting method. And the beauty of that is you can go back in time, do the cost segregation study as you were doing it today, but you still have to apply the tax rules that were applicable in those years. So say 5 years ago, bonus depreciation was 40% of eligible assets. You'd apply that tax law, and then you'd calculate what was quote unquote missed depreciation and put that on the current year return with attaching a Form 3115, an application for change in accounting method. So you might have lost a little time value of money, right? Because you didn't take advantage of it 5 years ago, but by no means you cannot take advantage of it. So if you have something that you've been operating for a few years and all of a sudden listen to this podcast, you're like, hey, I got money on the table. Have a conversation with your CPA, see if it's a service that they provide, or find someone who can provide it, because at the end of the day, the clock is ticking. And the longer wait on it, and let's just say you wait 39 years, then there's no benefit because you already
Yeah.
depreciated, right?